put the focus back on equities. We've got Rajnish Kumar, Executive Vice President at Fullerton Securities, who joins us live on the show. Rajnish, thanks for chatting with us. I want to kick it off by talking about the rupee. Given the way the rupee is moved, what kind of an impact do you see it having on on select stocks, which obviously are which have exposure to the rupee over the next couple of quarters?
One of the clear impact that we have seen has been in terms of forex losses, because any sharp movement typically means corporates are caught unawares, and that results into forex losses. So that's something that we have seen. For example, a couple of days back we saw yesterday, in fact, Renuka Sugar incurring such a huge forex loss. So that has been one thing which we have already seen. Beyond that, I think of course now that we have reached a certain level, and probably will not see such sharp movement either way immediately. The companies which are more export oriented will obviously benefit a lot. So you could probably see the benefits accruing to companies which are like IT, which should gain from this kind of rupee weakening. Also textiles exporters. But on the other hand, if you look at our bulk of our economy is import led, bulk of our we import a lot more than what we export. So the impact in terms of cost of goods, input costs going up for commodities, etc., will be quite high. So you could actually this kind of a weakening of rupee can flare up inflationary effect. Cost of metals, which have got global linkages, will go up, and so that will see an impact on manufacturing companies, where you'll see a lot of compression of profitability, which already was the case in the previous quarter and probably will get worse going forward.
Meantime, the European markets have opened and started off sharply negative right now. Almost about 0.5% to 1% is the kind of cut that you are seeing across indices, the CAC, the FTSE, as well as the DAX. Meantime, the other pressure point, of course, is banks, and in particular the ones that have exposure to airlines, and in particular it is Kingfisher Airlines, which is raising a lot of concerns. Rajnish, what is your sense, in terms of some of these banks which have exposure to Kingfisher Airlines, the likes of Bank of India and SBI, which indeed is the largest lender, because at a time when in any case asset quality concerns are, extremely painful for the entire sector, now you have them lending to aviation, companies, wherein they will eventually have to treat them as NPAs, which are only ballooning for them.
Right. If you look at the airlines industry, and if you look at specifically, let's say something like Kingfisher, I don't know how viable the business model has been, and how possible will it be for them to turn around their business quickly. So to that extent, it does look like that banks are in for a fairly difficult time. But then the good news is that the amount of money, while it looks like a big amount of money, it's still a very small amount of money when you look at in the larger scheme of things. So I would not be too worried about a big impact on the banking because of civil aviation sector doing badly, because let's face it, the percentage of loan exposure to civil aviation, when you look at the total exposure, total lending by the banks is still quite small, quite minuscule. I would be more worried about what's happening in the power sector in the context of bad loans and NPAs and how that's going to play out. So civil aviation, of course, is bad news for banks, but it's still, I would say, a fairly limited impact.
What would be your view on the PSU banking space, in particular stocks like SBI, which have corrected significantly over the last 6 odd months?
Right, if you look at SBI specifically, we don't see too much of a downside from these levels, because it's already corrected quite a bit. But we don't see much of an upside either, because we think that there will be pressures around NPAs on banks like SBI. So probably won't go down significantly from here. Maybe a very, very minor upside from here.
Rajnish, what is the sense on capital goods? Because both the majors, that is BHEL and L&T, have growing concerns about order visibility.
Right, see, capital goods industry, unfortunately, there is no clarity. There's right now for us as well, because a lot depends on the policy making by the government. And see, one of the things which could probably play out well for them is that the interest rate cycle could reverse, and which may mean that the interest of private sector, the investments could go up, and hence that could be good news for these companies. However, bulk of it actually is dependent on how the government policy making takes place, and that is something which is very difficult to guess right now. So I think their future currently is difficult to guess, and so right now, in spite of all the sharp corrections, one would probably stay a bit away from them till one sees signs of some kind of government action happening on infrastructure sector.
All right, Rajnish Kumar, thank you so much for taking time out and joining us on Street View at lunch right here.